One more try. We're disconnected from the Wi-Fi, so it should be a little bit better. Hello, retail investors. Hello, fellow ape investors. Welcome to Dallas, Texas. I am home. We're getting all settled in. Things are good. Beautiful 90-degree day today in September. I'm very much looking forward to what's going on in the current stock market and all of the interesting movements in meme stocks right now. If you guys are unaware, you should take a look at different stocks out there. Take a look at the cannabis sector, particularly meme stocks such as Sundial, Tilray, and Aurora Cannabis. They're up, some of them hundreds of percentage points in the last several months. What's going on, Pulsar, Mama Bear, Ricardo? It's good to see you guys. In addition, it seems AMC has reached a support level. And it's not entirely surprising that AMC was shorted after the reverse split. I think everybody who understands the markets expected the stock to get shorted more after a reverse split, because that is exactly the way that short hedge funds and family offices can try to limit the amount of money that AMC can make. Therefore, when you take into account the 40 million new shares of AMC that AMC has the possibility to issue, along with the current price of AMC's market cap, it perfectly aligns with the market cap of AMC prior to the issuance of 40 million shares. They are really, really trying hard to limit the upside of AMC because they understand, short hedge funds understand, that AMC theaters issuing shares on the open market would send them directly to lit markets. When shares of AMC go directly to lit markets, well, what happens in January of 2021 happens again. When you issue shares directly on lit markets, for example, in June of 2021, 11.55 million shares were issued of AMC onto lit markets on the open market. And the stock price of AMC at the time went up from around $10 a share to $79 a share. $79 a fucking share. So AMC's market cap from the reverse split to today has been cut by about 75%, almost 80%. And that's not surprising whatsoever, because the short hedge funds are trying to account for the price differential that will occur in the near future. The price movement is not something that I made up or you made up or someone's speculating on. It is a factual piece of information, and we've seen the price move several times. And in the past, when AMC finished issuing those shares, well, the stock price began going down. That was June 3rd of 2021. AMC issued shares from the end of May all the way through June 2nd of 2021. And we saw massive price increases. Today, AMC's up just a few percentage points, so it would entirely surprise me to see that prices changed to the positive, because AMC started sprinkling a couple shares out onto the market. Callie asks, when is the last day to issue shares? There's no last day for AMC to issue shares. AMC can issue shares whenever they please. There is nothing preventing AMC from from issuing shares today, tomorrow, next week, next month. Cujo's Sandlot asks, is it true that AA picks the price to dilute regardless of its current price? Absolutely not. Well, let's set something straight, my friends. A lot of people have been posting on Twitter about something called a green shoe. And in case you guys are unaware, a green shoe is a method of issuing more shares beyond the initial public offering than originally expected. But a green shoe only applies to initial public offering, an IPO. Therefore, that does not apply. It doesn't matter. Anything you've read about a green shoe does not apply in the case of AMC right now, because AMC is not an initial public offering. So I understand there's some people out there that are really pushing for clout or really trying to be the ones to figure out what's happening. But I go based off of the fundamentals, the facts, the manipulation, and none of that can be attributed to a green shoe, because a green shoe only occurs during an initial public offering. So let's just get that out of the way. AMC cannot issue shares at whatever price they want. They're issuing shares at the market. It is an at the market offering. So that is the way that things are going to be. And even though they may do that, the price will go up based on the market price and the number of shares, the volume that they sell. Max Dog asks, do you think they can hide 40 million in dark pools to restrict any price action? No, Max, because AMC doesn't sell their shares on the dark pool. AMC sells their shares directly on lit markets. Let's go for a little cruise. I need some coffee. Get ready to head out in the Roush. She's looking good today. Needs a bit of a car wash though. She's a little dirty. Those shares are not sold in dark pools. They're not handled by the hedge funds. Those shares are being sold by AMC directly on lit markets, such as the New York Stock Exchange. Ain't famous, I'm loving the heat out here, my friend. I used to drink a lot more coffee in the past, but that has really changed. I've changed my consumption. Oh, Uriah Lewis asks, why are they diluting so low? Uriah, AMC can only sell at the current market price, and the current market price has been heavily shorted in order for short hedge funds to limit the amount of money that AMC can make. That doesn't mean that the price won't go up as they issue shares, as it has every single time that AMC has issued shares on the lit market, because those shares get traded directly on lit markets and cannot be hidden in dark pools. They cannot be traded over the counter. They cannot be manipulated until after they've already been sold. So that is not something that Adam Aron or AMC can have anything to do with. They have nothing to do with the dark pools. They do not trade them on the dark pools. You understand? They sell those shares directly on lit markets. You know what really strikes me as odd? Cinemark has filed for bankruptcy. If someone can correct me there if I'm wrong, but I'm pretty sure I was seeing people posting about Cinemark filing for bankruptcy. No, I don't smoke Cools. They're American spirits. I'm not closing the car window, yo. It's my car, and I feel like cruising with the window on. It's not even a car. It's my truck. You know what? I'll do you a solid, since you guys always ask. All right, Gway's World. Why is short interest so low? Because there was a change in CUSIP numbers and a consolidation of AMC and APE stock. So the new CUSIP, even though the short positions have rolled over into the new CUSIP, the actual short interest does not reflect on the new CUSIP short short interest data. It's really as simple as that. You're not seeing it on short interest data. The Ortex short interest is not reflective of the old short interest that has come into it. In my opinion, it should even be added up. We were seeing a short interest of 29% before the CUSIP and name change of APE to AMC. And then when you combine APE into it as well, that would dilute the short interest slightly, let's say maybe to around 23%. Then you've also got to add the additional 11 or 12% current short interest on AMC. So in my estimates, that puts the self-reported short interest on Ortex data to be around 32 to 33%. That does not include shorts marked as long or rehypothecations, naked shorts, synthetic shares, married and divorced puts. It does not include any of these things and then some. It does not include ISDA contracts, swaps. Yvonne, that's too kind of you. I missed you guys as well. I've been getting settled in here at our new home in Dallas, Texas, working on Xchange very heavily with my partners and things are going well so far. We're going to be looking for office space here in the coming days, and I'll take you guys along for that ride as well. We're going to go check out some downtown Dallas high-rises and office spaces to begin our journey as the only stock brokerage firm created by retail investors for retail investors for the purposes of trading shares directly on lit markets. So that's why it's called Lit Exchange. Appreciate you, Yvonne. You're too kind. Patriot asks, can retail buy bonds of AMC? To my knowledge, retail can't buy the bonds of AMC, but that doesn't mean that there might not be some sort of change that would allow retail to buy them. And again, that's to my knowledge. There might be some sort of things going on behind the scenes that I don't know about. So no, as of now, AMC cannot sell the bonds that they're issuing directly to retail, but that may change in the future. Regardless, I don't think retail needs to be buying those bonds. But what I think doesn't matter. You should do whatever the hell you want with your money. I think retail should do whatever they please with their own money individually. I know me personally, this current dip in the price has been absolutely massive, and it is directly attributed to the shorting of the stock. And how do I know that? Well, look at the order percentage, buy and sell order percentage on different broke dealers. If you look at Fidelity, for example, the buy orders are equivalent of 80 to 81% of all orders, and the sell orders are the equivalent of less than 20%, 19% of all orders by retail on every single day. Every single day. That makes me supremely confident in the fact that, well, if retail's orders are around 80 to 81% every single day in purchasing of the stock, well, 19 to 20% selling is not sufficient to drop the price by 37% in one day, like we saw occur on the day that AMC announced the issuance of up to 40 million shares. And if the stock price went from $11 a share to $79 a share on the selling of 11.5 million shares, what do you think is going to happen to the stock price when AMC sells 40 million shares? That's 4 times as many shares as they sold in June of 2021 when the stock price went up over 800%. So not even accounting for the increased short interest or the additional changes in the stock and the lower float, which, just so you guys know, the float is 10 times smaller now than it was pre-split, which if you account for pre-ape even, the float was 560 million without including ape, and now the float is around, that's around 400%, even when you include the additional ape shares. Ape shares now, along with the AMC shares, you've got about total. Previously, in June of 2021, there was 516 million shares. That's going to make a huge difference in the actual share locates that can be found by short hedge funds and family offices, market makers, broker-dealers, and so on. And broker-dealers will hedge for the increase in price. They will delta hedge. There's no doubt about it. Because the broker-dealers aren't going to be caught holding the position of the shorts. They will not. That's not the way that it works. IBKR and Fidelity and Schwab and Webull aren't going to go bankrupt to allow the shorts to manipulate the stock when it's running up hundreds and hundreds, if not thousands of percentage points at a time. They will not. Let me get this thing off of here, off this mount. Did AMC state, hang on, did AMC state they would not issue shares under $9 in the 8K? Do you think that it's under $9 right now so they won't dilute? That's possible, but that also doesn't mean that it can't go above $9 at any point. Right now, when you look at the price being around $7 and, let's just say $8, it's under $8. Before the reverse split, that would be an equivalent price of 80 cents a share. This is the absolute greatest opportunity I have ever seen for myself to average down, dollar cost average down on my AMC shares, as well as my options. I'm able to increase my position in options and increase my leverage in the stock with very minimal changes in inputs of actual cash right now. A lot of people get down about the stock price being brought lower, but for me, it's just a better deal. I'm not in a rush to sell my AMC shares. Would I like it to run up to $1,000 or $10,000 or $50,000 a share tomorrow? Sure. Who the fuck wouldn't? Everyone except the shorts would like that a lot. But do I mind waiting another week, month, year, even 2 years? No, I don't mind at all. I don't mind at all, because I can make 10%, 15% on the S&P 500 or trading other stocks or day trading other stocks and options anywhere on the stock market. But what good is 10 or 20% going to do me? I've been doing that for years. I don't need any of that garbage. I'm here for thousands and tens of thousands of percentage point gains on AMC. And if I have to look at my account and see it be down 50%, 60%, 80%, 90% for a period of several months or even years before I get those positive 10,000, 20,000, 50,000 percentage points, I can deal with that because I'm not scared of the current price. I haven't lost a dime because I haven't sold. I haven't sold a single share at anywhere near these prices, so I don't care if it's this low. I continue to buy more and dollar cost average down. The actual value of AMC is billions of dollars more in market cap than is currently being reflected. So the current cost being so low, let's say it's 80 cents pre-split, $8 post-split, which is the current cost, it really means nothing to me other than it's a wonderful buying opportunity. And again, because I'm not scared of the price and I'm not interested in selling my shares anywhere near the current prices, it doesn't matter to me. It doesn't matter to me if the price is currently down, because until I sell, I have not lost a dime. My eyes are on the road, folks. I'm not looking at my phone. I know that the glasses don't let you see that, but I'm not looking at my phone. I'm looking on the road. But I appreciate you guys looking out for my safety. I'm just holding the phone because it's very bumpy sitting in the phone holder. But I appreciate all of you guys. Thank you for your support. It truly means a lot to me. I am cruising over here by Lake Ray Hubbard right now. Thinking about going to the country club, hitting the pool a little bit later. It has been really nice enjoying the hot weather down here compared to the cold over in the Chicago suburbs so far. And I'm really looking forward to doing some shopping for some new high-rises. Looking for a new high-rise to rename Xchange Tower. Little Jimmy asks, what if they run the company into the ground and pay no capital gains tax? Well, my friend, a lot of people don't realize that if AMC hadn't issued the shares of APE, AMC's preferred equity, over a year ago, that would have already happened, and you would already be holding a bag of zeros in your account. AMC, by issuing APE shares, saved the company and saved all of us retail investors from losing every dime that we had invested. Issuing shares of APE was the best thing that they could have possibly done, because without that, they wouldn't have had sufficient funds with which to pay off their debts. They made hundreds of millions, actually billions of dollars off issuing APE shares. And by doing so, they were able to pay down and restructure and refinance a lot of their debts. They saved tens of millions of dollars in interest rate payments on the actual debts that were outstanding, and also overhauled a lot of theaters and purchased more new theaters, further increasing their revenue and profits. They also used that money in 2,600 Walmart stores, retail stores, in addition to branching out here shortly to other stores as well, thus making them hundreds of millions of dollars in actual profit, and even more so in revenue on top of that fact. They also came out with AMC credit card, which is going to give them a large percentage of revenue and profits as well. So the fact that all of this has happened is directly attributable to AMC smartly issuing shares of APE. That is the reason for AMC not being at $0 right now, like some other movie theaters that have recently gone bankrupt. Now, AMC put it up for a vote, and investors, such as myself, voted yes. To the tune of 87% of investors voted yes for the conversion and the reverse split and the issuance of more shares, because that was also the smart thing to do. That is what keeps AMC afloat, keeps them from going out of business, and allows them the opportunity to further sell off more shares and pay off more debt. Once AMC's debt is paid off, shorts will have no reason to stick around. They probably will stick around anyway, because they risk their very solvency by closing out their short positions. But that doesn't mean that there would be a reason for them to stick around. In addition, they might even get margin called by the prime brokerages that realize that AMC has absolutely no debt left over, and there's no reason for them to be shorted whatsoever. That being said, my friends, if I were to ever feel that my investment in AMC was in jeopardy, I would sell my shares and I would let everybody know it's been a slice. I sold my shares, which I didn't. I'm just saying that's what I would say. Have a great day, everybody. Have a great life. Best of luck to you all. But that's not the case. I remain steadfast in my due diligence because I have done my due diligence for the last 3 years on the entire stock market, geopolitical events, macroeconomic changes in the world, and meme stocks, particularly AMC and GameStop. And if you want the honest to God truth, I do not believe that GameStop has the potential of AMC. That is my opinion. You are free to think differently. That is based off of all of the due diligence that I have done. And GameStop does not have the ability to make the kind of future revenue that AMC has, nor does it have the same number of retail investors, being over 4 million retail investors, plus over 4 million retail investors throughout the world that hold AMC, that are diamond handing AMC, that hold around 90% of the entire float. That's the reason that shorts and market makers and broker dealers need to buy the shares that AMC issues during dilution. AMC's dilution gives them their only opportunity to cover their short positions, because retail's not fucking selling their real shares, at least not the majority of them. And that's evident by the OBV, the on-balance volume, remaining extremely elevated. The on-balance volume of AMC is practically at all-time highs, nearly 4.8 billion OBV. You can look that on the charts for yourself. It's an indicator. The short interest of AMC, although it looks less than it did prior to the reverse split due to the QSIP number changes, is, in my opinion, in addition to the short interest that was available prior to the reverse split. So when I see the Cortex data showing 12% short interest on AMC, I add that up to the short interest that it was the case around 29% before the reverse split as well, and the short interest of APE before the conversion of reverse split also. That being said, my friends, I wish you peace and wealth. If anything were to change, I'd be the first person to come up and say, hey guys, AMC's not looking so hot, I'm out, but that's not the case. AMC's looking great. The AMC market cap right now stands around 1.5 billion, which is a fucking joke that it's that low, because their revenue for this quarter alone is going to exceed 2.5 billion. A company having higher quarterly revenue than their entire market cap is unheard of. Unheard of. The current price does not reflect the fundamentals of AMC whatsoever, because of the heavy amounts of shorting and naked shorting and manipulations that are rampant in the stock market. Therefore, I remain steadfast in saying we're going to be so motherfucking rich. And I will wait as long as it fucking takes. I will get rich or die buying, because I ain't selling till they fire Janet fucking Yellen. I ain't through until they liquidate 0.72. I'm holding until Citadel's folding. And on that note, I bid you adieu. Peace out, everybody.